Good morning, everyone. This is Frank Ochoa with your Mr. Top Step pre-market report. Hopefully, everyone had a fantastic holiday and just now getting back in the swing of things after taking Friday off and looking like the ES remains obviously above key levels. 1800 continues to hold above the 1800 zone. I think 1795 continues to be a key area to watch. And that zone right there, 1795 to 1800, could be a great spot there to fish for some longs for an early round of weakness. And if price does dip down into that zone, I think buyers will defend 1795s on up. If price does break down below 1792, that would indicate to me more of a wider retracement. I just don't see that happening right now. But if it does, if we do get down below 1792, 1790s, there could be more of a pullback here. We have a clear trend line that is formed beneath the lows over the last couple of weeks, and violating that line at 1800 could bring about a wider retracement down towards 1775s, which again would be another great spot to pick it up. But again, this market has been very, very bullish lately, and any pullbacks at all have been very, very few and far between. One-day pullbacks or 3-day pullbacks that are very, very modest. So not sure how much we get here, but if we do fall into that 95 to 1800 zone, that could be a great spot to start fishing for longs. Holding above 1800 would suggest more upside to new highs. I think we have really good potential to get into the 1820s this week, and as high as, at the current prices, as high as 1827.75. So brand new month brings about new average daily range, average weekly range, average monthly range. So I'm calculating all those targets here, and we'll see how price responds over the first couple of days of the month, which will give us a really good idea of where these targets could be. In terms of the day targets for today, I have upside targets 1808 and 1811 for today. Short term on the downside, 1801.75, which we already hit this morning, and also 98.5 would be the primary downside target. So the primary targets for today are 98.5 on the downside and 1811 on the upside. For crude oil futures, we just got our open right now, and we're testing the early key level, which is 93.20 to 93.30. That's the early key zone here. Obviously, 93.20s was major support. We broke down below that zone last week and got as low as those 91.70s, I believe, 91.77. We're now kind of coiling up toward the apex of this tightly coiled range here that could offer a significant breakout opportunity once we get outside of 92.50 or 93, call it 93.50. So right around that zone, we get a breakout from that zone, we could see a solid move in the direction of the break. Overall, we remain very bearish, obviously, in crude oil. We've broken down from that 3-week trading range to the downside. We retested the 94s, or very close to the 94s late last week, and then sold off. So I think if price can't get back above those 94s, we're likely headed for another big time push lower. And this time I really do think we get down into 90.80 right now. 90.80 would be the current downside target for the week. But obviously that's going to be updated as the day progresses today. On the upside, 95 would be an upside target for the week. So that's what I'm looking for right now. We're seeing how price is going to respond around that 93.20, which is a key zone. That's why we're coiling up around that way. I think overall, if we can't get back above 94s, we're going to look for another big time push down. Right now, the primary upside target for the day, 93.64, and 94.01 would be the secondary. On the downside, the primary target is 92.19 with a scaling point at 92.57. So that's what I'm looking at this morning. Since I took a day off, I'm just going to kind of ease into things this morning, see how the market behaves. I might take a few trades, we'll see. But it's good to be back in the saddle. And good morning. Let's see how the rest of the day plays out. Kathy, you're up.